Welcome to the Daily Stockcast with Paul Wall. This is the second episode, and today we're going to be talking about GME and AMC and apes going to the moon. Roll credits. Welcome to the second episode. We're here with Dane again. How's it going?
Hey everyone, happy Tuesday.
Happy Tuesday evening after hours. We're going to be talking about GME and AMC. It's time to go to the moon.
All right, well, thanks, Paul, for having me back on the podcast here.
Episode 2.
What are we talking about today, I guess?
We're going to talk about GME and AMC, a classic Wall Street bets play, which has gotten interesting over the past, few days. Now, it hasn't been interesting in a while since, around January, February, when things kind of got crazy, which I know you're not too familiar with just because you weren't, necessarily active then trading.
Right, yeah. I missed the first round in January, I think.
Right, so like we were saying, we're calling it the my first tour of duty with GME, which I got, lucky in a sense, but also knew what was going on a little early, more than normal, because GME had originally spiked from, I remember, I've talked about this on another podcast, but I remember it went from 20 to 40 on a Monday. And I was like, oh man, I totally missed 100% opportunity, especially with call options. You can make way more money. And I was like, oh, I totally missed it. So I was like, well, the next run I could do 40 to 80, logical, right? Mm-hmm. And they only had, for the following week, I think it was, I want to say $60 calls or whatever it was. So I ended up buying them just as a lotto. I only put, $1,000 on. I was like, whatever. If I lose it, I lose it. Who cares? And then sure enough, that's when everything took off and everything went crazy and everything went to, $200-300 that week, the following week. So I ended up making, what was it, 84,000, like I was telling you.
Jeez.
From 1,000, I made 84,000, and then 84,000 turned into like 230 or what, 232, and then everything else went crazy after that. So it just got right from $950. It was around 947, whatever it was, 950.
That's insane.
Call
you
options.
rode the wave.
Yeah, I rode the wave, and then I ended up selling it. Pretty good sells, but yeah, it was wild times back then. But now
that's incredible. We
might be coming up on another, opportunity here, so to speak, just because of the way things have been going.
So how have they been going then?
It's interesting that, to me, like, short squeezes usually go back to where they start eventually over the course of time. Mm-hmm. So like you'll see a lot of these big short squeezes, let's say they run from $1 to 10, right? And they go up to 10 over a few months or 6 months. Eventually they come back down to $1, $2 range. GME is interesting to me because it went from, $4, $5, $6, $10, $12, and then it started accelerating. And it only came down to, like, at its lowest, like 140 at points. Like, so it's up 10. It's up 1,000% from where a low point of it was, kind of, and it's held that. So it's went sideways in that range between like 150 and 200 for approximately like 2 solid months, right? So when that happens, you're like, why is this happening? Like, something's weird here, because someone's either there's someone with a lot of money holding it up, or there's so many short positions that they're holding up themselves by just covering very slowly. There's something going on where GameStop was still, because even AMC came way down, right? AMC went same thing. AMC went crazy at the same time as GameStop, which I never traded AMC, but it went crazy. It came way down, and now it has rebounded. And now this week, starting today, GameStop and AMC are both running almost, together, because I think the hype is coming back, so to speak.
So we're running through higher highs right now.
Yeah, I mean, AMC is about to break its high. AMC is close to breaking its high from the January run, or early February run. GME is not as close. However, it's breaking out of its technical, like a bull pennant, basically.
Right.
So they're both breaking up on big time technicals. Like they're both breaking out, and one can fuel each other, like we were talking about earlier. Where you could have, I feel like this time I said AMC is fueling GME, but they fuel each other and vice versa. It doesn't really matter. Realistically, It doesn't matter. They're both breaking out. in my mind, this hopefully the start of the second big wave where there's a lot of retail traders again that can make some serious money if they know what they're doing. At the expense of possibly hedge funds and whoever else is short, depending on what's going on.
Right.
So.
Okay, so for someone that, I myself don't know much about this, right? So for a squeeze like this, right, what's the expected range that one could expect out of a squeeze?
So in my mind, if we just extrapolate from last time at this price range, so now you're, in the beginning you're at $5. So to go 1,000% is $50. That's to me a substantial move, and obviously it's plenty of big move. But if you do that from here, now you're talking some crazy amount, right? You're talking $2,000 per share, which to me again it's even for me it's a little. I'm like, that's a little ridiculous.
Right.
We're getting way out there. But again, apes hold, and moon could come. But what was interesting today was there was a lot of call sweeps. People were buying. Big money was buying call options for July 18th for the 800s. So what that means is someone is placing a bet that by July 18th, GameStop will reach $800 or greater, essentially.
Wow.
Right, which is interesting too because it wasn't little money. It wasn't $1,000, $2,000. It was there was big, and I looked at the bid at one point, and there was $250,000 on the bid for options. So because options are very risky, so you could lose your entire investment very easily.
Yep.
So for someone to actually be bidding those up that heavily, to me means there's the same thing that kind of happened in January. There's big money at play. They're sitting there. They've waited long enough. They're like, okay, now it's showtime. We're gonna basically essentially gamma squeeze, plus whatever else they did. They're going to have common shares too, generally. But they're going to buy all these way out of the money call options on purpose to purposely drive up the price higher and higher.
Yes, yep.
So, but again, if we only go 5 times from here, so 500% from here, it's $1,000 a share, whereas the previous high was $535 or whatever. It was slightly over $500. But we're not that far away at this point, realistically. Because last time we were doing 100% a day, no problem. We do 100% a day now. We're talking 200 dots. Right now we close at 216. We just closed at 216.
2 days basically.
Right, 2 days we could be up to 1,000. I mean,
800 something. Yeah.
Right, whatever. Everything pans out, but still,
range,
that's crazy for saying. We're at $4 in January, or, $6, whatever. Whatever
the meme stock is not over.
The meme stock has come back to life. It's a zombie. AMC, same thing. AMC is now almost touching all-time highs, and once it breaks over all-time highs, that's extremely bullish from a technical standpoint. So you have all these things combining together at the right time, where now we're getting funky again, as I say. It's just it's a weird time, because I've never seen this again. Some I've never seen. I've just never seen where there's such a legitimate large company that's being squeezed up by a bunch of retail traders on Reddit who literally call themselves apes. They own one share. They don't own millions of shares. It's one, a 7 million of them own one share.
How many people are on that subreddit?
I think it was 7 million.
It was around. So last time I checked, I think it was more than that, 10. Yeah, maybe 10 million or something like that.
Million now. I mean, I remember
that's insane though. Yeah, I mean, you have people with positions in the thousands of dollars here easily.
Right, sure. Right, and I just remember, it was just weird, just a random thing. But I remember when I first joined that subreddit, I think there was 700,000 of us, maybe at most. Right, I just did it for entertainment, too.
No, you're right. Yeah.
And I would post some of my crazy losses on there, and I had a top post the one because on Beyond Meat I lost $200,000, some dumb. Unrealized, but I lost. Some people are like, yeah, you're an idiot, blah blah blah. But it's funny, you go on there and you're like, whatever, who cares? But then now it's a legitimate thing. Now people are hedge funds are like, what's Wall Street? Let's do it, because there's enough of them now.
That is true.
It's an army.
It is.
You can literally lock
seriously,
up. It's so weird to me. And I don't know if there's anything anyone can do about it. Honestly, it's it is what it is.
Yeah, I mean, they could try to call it market manipulation, but
is it really? If I just tell you, hey, I'm buying this, and you're like, okay, I'll buy it too, and then you tell whoever, and they tell whoever. I mean,
it's the same thing here. This is all speculative.
Right.
This isn't financial advice here. So
never financial advice. This is never financial advice.
Right. So I mean, in the past, is this the first, I guess, meme stock to ever occur? I mean, a squeeze of this size.
Yeah, in a sense, because of the internet, it's so different now.
Right.
But I mean, even in 2008, when the internet was around, like, it was way different for stocks and all. But everyone remembers the Volkswagen squeeze, right, of 2008, where everyone talks about, because at one point they were talking about Tesla being the Volkswagen squeeze, blah, blah, blah. And even that, like, I've looked at it, I'm like, yeah, it's a big squeeze, it's a giant squeeze. But, like, I don't know, this feels way different to me. Like, the Volkswagen squeeze went from, like, at one point, so it went from, like, 80 to 1,000, right? You're like, oh, that's pretty good. But even GME, like I said, we were at, 2 years ago? We were at, like, $4 or whatever we're at. Like, we've already, like, way surpassed that. And it still has the potential to go even higher in the sense of now we might be on, like, 2 coming up. Like, how high can this, like, go? I don't know. I don't know if it goes anywhere, but, again, because we're speculative. But it's just interesting to me that we could set some serious record, and now you have the combination of social media and everyone working together in a non-illegal way, because again, you can talk. First Amendment,
you like the stock,
right? Yeah, I like the stock, right?
Yeah, what's
anyone gonna do about it?
I like the stock.
It's the First Amendment, right? I can say I like the stock, and you're like, hey, I like it too. I'm gonna buy it too.
Yeah, exactly.
And then what do you do? So maybe in a sense, it's hedge funds. It's their own fault. Positioning.
Yeah, I agree. Yes.
They never thought they could be outbullied, right? It's like playing poker and you have the biggest chip stack. You're like, I can't be outbullied. Well, then what if, there was no buy-in limits, and all of a sudden a guy sits down next to you and he's got 5 times your chips. So now he can just bully you, because he can just be like, I'm just going to go in all in every time. What are you going to do about it, right? Eventually I'm going to win.
Yep.
So it's a sense of, I think, hedge funds and different, they have their own market makers, of course, but they have unlimited money. So realistically, they can just bully retail into the ground until this time they got their hand caught in the cookie jar a little bit. Now, granted, it might not be a big deal most of the time, but now Wall Street Bets is really trying to stick it to them. They're not even getting their hand in. They're like, come on, stick your arm in a little more, and we're just going to suck your whole body in and kill you off.
Yeah, this is just retail takeover.
Retail takeover.
Yeah, it's hostile takeover. It's hostile takeover.
Citadel, and Melvin Capital. I think rest in peace. Melvin might be already. I think Melvin's gone.
Melvin's
I think
gone.
He's out of the picture. And then, but Citadel's huge. I don't know if they could ever take.
I don't think so.
Citadel's giant.
Well,
right?
I mean, you would think that they would cover before 1,000.
Yeah, but I don't even know if they're short. Who even knows?
Yeah,
they speculate that Citadel is in some funky business, which I wouldn't doubt at all.
I don't know what books you can look at for that,
Well, you can't. You can only know your as far as I know. I mean, I guess it depends, because there are some firms that will release their short interest and stuff, but I don't think it's required by law. But now they have to report it, and then the government reports it as saying there is this much short interest, but they don't tell you who is short.
Yep.
Whereas, if I'm in part of a fund and the fund wants to report, say, hey, we're just so you know, we're short this or whatever, short that. That's fine. But as far as we know, we have no idea if Citadel is short or not. They could be. It's totally possible, because they lend all this money to everyone. Or maybe they lent somebody to a hedge fund and they went short.
Yeah.
And so now they're leveraged out, right? So now they're going to have to kind of either close out that
there's
guy's
gonna be margin
position.
Calls.
Right. So like with Billy, the Chinese
Short,
guy. No. Recently, there was a guy in China who was way over leveraged.
Oh.
Yeah, that was the big thing.
He got margin called?
Oh yeah, he got totally screwed.
Did
he went upside down. No, he can't. He couldn't. No, once you're liquidated. Like they just liquidated. So
Goldman he sold off his other assets and then.
Oh no, they just totally liquidated him.
Okay,
So like Credit Suisse lost like $4 billion. Goldman Sachs, $4 billion. Goldman Sachs, I think, actually profited because they were the first one out, and that was like the big meme. It was like all the banks looking at the other banks like, "You sold?" And they're like, "You sold?" And it's Goldman Sachs like, "Yo, Goldman Sachs, I sold first," because they actually profited from the trades. But Credit Suisse lost like $4 billion. So they lost like 3 years of net profit. Well, one guy that they over leveraged.
Yeah. Well, it seems like we're starting up quite the roller coaster ride again. I think
it's coming. Strap in the next 2 weeks, hopefully. Maybe not. I mean, maybe a month, but I think it's coming.
HODL.
Huddle to the moon, and we can all eat bananas on the moon one last time.
Apes together strong.
Like, subscribe, share. Again, always. Thank you guys. Comments would be nice too. I love reading the comments. Thank you guys.